Welcome back to the Tech Stocks Daily Podcast, where we dive into the heartbeat of the tech market, unpacking the stories that matter most to your investments and curiosity. In a recent and rather unexpected twist, Google Maps has found itself in the news spotlight, but not for reasons one might expect from the tech giant. The incident revolves around two tourists, Philip Meyer and Marcel Schona, who embarked on what they thought would be a straightforward journey from Cairns to Bamaga in Australia, only to find themselves led astray by Google's famed navigation system. The duo unwittingly followed directions onto a secluded dirt track in far north Queensland, resulting in their car getting stuck in the mud 37 miles into their journey. This mishap started a daunting trek back to Cairns that lasted more than a week. Their ordeal reads like a script from an adventure movie, complete with crossing a river inhabited by a crocodile, weathering thunderstorms and blazing temperatures, and trying to survive the nights with no shelter besides the stars. The tourists' reliance on Google Maps for guidance into the wilderness is a stark reminder of the limitations and trust we place in modern technology for our adventures. Google's response to this incident was swift, with a spokesperson expressing relief that Meyer and Schona were safe and confirming that the misleading path had been removed from Google Maps. The company emphasized its reliance on multiple sources for updating maps, including third-party data, user contributions, Street View, and satellite imagery. However, this was not an isolated case of adventurers finding themselves in predicament due to following directions from Google Maps. Previously, a mountain rescue crew had to save hikers in Vancouver, Canada, who were led astray by the app. Following these events, a Google spokesperson reiterated the company's method of updating maps using a variety of sources, including feedback from the community. This incident sheds light on the broader issue of technology's role and reliance in our daily lives. As we constantly navigate between the digital and physical worlds, the imperfections in technology remind us of the necessary balance between technological guidance and the human judgment, essential in confronting the unpredictability of the natural world. Google Maps, a tool that has undoubtedly revolutionized the way we explore, also serves as a reminder of the boundaries of digital navigation and the adventures, sometimes unintended, that lie beyond. Today, Apple finds itself under the microscope, not for the launch of a groundbreaking new device, but rather for its recent performance on the stock market. Once the crowned king of the stock world and the largest public equity holding of Warren Buffett's Berkshire Hathaway, Apple has seen a slip in its market dominance. It's no longer the most valuable company, a title now claimed by Microsoft, with Nvidia also threatening to surpass Apple owing to its valuation expansion. So far in 2024, Apple stock is down by 5.3%, in contrast to the NASDAQ Composite's 5.1% gain. The question beckoning Wall Street's corridors now is, why has Apple fallen out of favor, and what does it need to bounce back? At the heart of Apple's worries is the stagnation in its hardware sales, which have historically been its bread and butter. Despite record performances from its services division, Apple's reliance on device sales, which contribute over 80% of its revenue, has become a double-edged sword. The trouble lies in the incremental improvements in devices like the iPhone and MacBook, which have dulled the once irrefutable urge among consumers to upgrade with every new release. This phenomenon speaks volumes about Apple's predicament, a master of innovation, now seemingly trapped by its own excellence. Apple's vertical integration strategy, encompassing hardware ranging from phones to wearables and a bouquet of services like Apple Pay and iCloud, has fortified its brand loyalty. However, it's this very strategy that places the company in a catch-22 situation, as it struggles to foster big-ticket sales amidst an increasingly cutthroat tech landscape. A significant drag on Apple's performance points to its slowing growth in China, once a steadfast engine for its revenue machine. Compounded by competition from rivals like Huawei and broader market pressures, Apple's sales in China have dipped. However, Apple CEO Tim Cook remains optimistic, highlighting burgeoning markets such as India and the Middle East as pivotal to Apple's growth strategy moving forward. Despite the current challenges, experts urge that dismissing Apple's long-term potential could be a grave oversight. Its ability to maintain a premium valuation on more than just growth, banking on its brand and strategic business models, underscores its resilience. As Apple ventures into new domains, including artificial intelligence, the consensus is clear. Apple may be down, but it's far from out. The tech giant's journey illustrates the oscillations in tech's fast-paced world, emphasizing the blend of innovation, market dynamics, and consumer behavior that dictates success. Microsoft has surged back into the limelight, reclaiming its title as the world's most valuable company. This significant achievement comes at a time when the tech giant has displayed an unwavering focus on innovation and growth, despite the challenging market conditions that have seen its rivals grapple with assorted hurdles. Microsoft's resilience is attributed to a combination of strategic investments in cloud computing, enterprise services, and a burgeoning emphasis on AI technologies, areas that are increasingly becoming critical to the tech ecosystem's future dynamics. In addition to its impressive market valuation, Microsoft's news spotlight also shines on its robust innovation pipeline, promising a future teeming with potential and growth. This foresight has not only solidified its position in the stock market, but has also set the stage for Microsoft to lead transformative changes across the tech landscape. As we discuss this significant milestone for Microsoft, we're eager to hear your views on what this means for the future of technology and business. Do you believe Microsoft's current strategy will sustain its leadership in the tech industry? How do you see its innovations impacting our daily lives and the broader technology ecosystem? Your insights and opinions are valuable to us, and we encourage you to leave your comments and join the conversation. Let's delve deeper into what Microsoft's recent achievements could spell for the evolution of technology and its application in solving real-world challenges. Today's market sentiment appears to be a mixed bag of cautious optimism, with a sidestep into areas of concern, particularly around the reliance and implications of technology in both the consumer and investment landscapes. On one hand, we have seen a glimpse of the challenges faced when modern tech solutions like Google Maps direct users into unforeseen predicaments, highlighting the invaluable balance between technological reliance and human judgment. This not only impacts consumer trust, but also puts a spotlight on the tech companies' responsibility towards their users. On the corporate front, companies like Apple and Microsoft dominate the discussion, but from different vantage points. Apple's current narrative is tinged with concerns over its stock performance and market valuation amidst pressures in product innovation and global sales dynamics, particularly in China. This casts a shadow of uncertainty around its short to medium-term growth prospects, despite Apple's strong foundational business model and its knack for customer retention through its ecosystem. In stark contrast, Microsoft's resurgence as the world's most valuable company is a testament to the positive market sentiment surrounding its strategic direction, innovation pipeline, and robust performance against the backdrop of global tech and economic challenges. Microsoft's achievement underlines the potential for growth and resilience within the tech industry, especially for companies that continue to innovate and adapt to market demands effectively. The day's news paints a picture of a tech industry at a crucial juncture, grappling with the challenges of maintaining growth and innovation, navigating market pressures, and fulfilling the high expectations of consumers and investors alike. While uncertainties loom in certain areas, there are also significant opportunities for those ready to adapt and lead in the new technology-driven era. The overall market sentiment today, therefore, is cautiously optimistic, but underscored with a need for strategic foresight, adaptability, and a conscious effort from tech giants to balance growth ambitions with market realities and consumer expectations. Given today's news, if I had to choose, I would focus on Microsoft and lean towards a buy strategy. Microsoft's resurgence to become the most valuable company in the world underlines its strong market position and the positive sentiment surrounding its strategic direction, particularly its robust innovation pipeline and growth in cloud computing, enterprise services, and AI technologies. This achievement not only highlights Microsoft's resilience in navigating challenging market conditions, but also its potential for sustained growth and influence in shaping the future of technology. The optimism in Microsoft's trajectory suggests it's well-positioned to continue benefiting from the increasing importance of digital transformation across industries. With a diversified portfolio and a leading position in essential tech sectors, Microsoft appears equipped to handle market volatility better than many of its peers. Additionally, the company's strong financial health and commitment to returning value to shareholders through dividends and share repurchases add to its appeal as a potentially solid long-term investment. However, it's crucial to remind listeners that this perspective should not be taken as financial advice. Investing in the stock market involves risks, and it's important to conduct thorough research or consult with a financial advisor before making any investment decisions. The performance of a company's stock is subject to various factors, including market conditions, investor sentiment, and global economic dynamics that can change rapidly. Always consider your financial situation, risk tolerance, and investment goals when deciding whether to buy, sell, or hold a stock. In conclusion, today's market activity presented a fascinating tapestry of developments, from Google Maps leading tourists awry through Apple's stock market challenges amidst innovation pressures to Microsoft's crowning glory as the world's most valuable company. These narratives underscore the dynamic and often unpredictable nature of the tech industry, reflecting broader market sentiments that blend optimism with caution. As we wrap up today's insights, don't forget to engage with us. Like, subscribe, and share this video to keep the conversation going. Your thoughts and interactions fuel our passion for bringing the most pertinent market news to light. Be sure to return tomorrow for another informative segment, where we'll dissect the latest happenings in the tech world and beyond, keeping you informed and ahead of the curve.